Another case study for investor relations, this time Broadcom's fourth quarter 2025 earnings. And what we want to do, the overview here is consider the margin trap and the perils of a stretched valuation. And the setup here for Broadcom's fourth quarter earnings report was they had a beat and raise on revenue and earnings, so a great quarter, and they raised their dividend by 10%, but the stock was down almost 5.5%, driven by a 50 basis point miss around margin guidance. So let's get into the first piece, which is this idea of the valuation versus the guidance paradox. When a stock is trading at a 50 PE like Broadcom, the beat is already baked in. Investors are expecting you to raise numbers when the stock valuation is that stretched. Now, that means that the stock is going to be hypersensitive to small changes that change the underlying thesis of the stock. And in this case, it was the 50 basis point miss between guidance and expectations around adjusted EBITDA and gross margins. So the next piece is this idea of the 50-50 rule, 50 PE versus 50 basis points. And a 50 PE stock implies perfection, which means there's going to be natural selling pressure on the shares, regardless of how good the information is. And the hard fix is investors have to ask, is this a structural change? Because if there's a structural change going on here, that's going to be very hard for the company to fix. So you're going to see valuation destruction and rate resetting lower over time. And in this case, it's sending a signal that the AI racks are a lower margin product than the core business at Broadcom. So there is some sort of structural shift that may be small, but something that is going on in the underlying financials. And so the Mr. Investor Relations analysis is, how do you interpret this change if you're an investor relations officer or a public company executive? And the idea is that a medium fix is if it's just simply rebalancing. That means investors see this as just some noise. There's some medium-term change. It's not a structural change to the thesis. You will get some selling, but the stock will recover. A hard fix is if investors finally see this basis point guidance change as a structural change to the underlying thesis. Because the stock has run for so long, if there is any sort of hint of structural change, those long-term investors are going to look to rebalance out in size. And so what's the smoking gun here? It's this idea that the AI product mix that was discussed during the earnings call, and the idea is very simply that the AI system racks are going to dilute gross margins. So you're seeing some sort of structural change afoot at Broadcom. Now the key here is a 1% drop in margin is often worse than a 5% beat on revenue. You always have to be careful and understand what is the guidance relative to the beat that you just printed in terms of the quarterly results. Thanks for watching.